And more breaking news overnight. The war is taking a toll on gas prices.
The world's oil powerhouse, Saudi Arabia, holds a weapon more potent than missiles: its control over crude prices. A single decision to unleash a flood of cheap oil could upend economies, bankrupt rivals, and rewrite global energy strategies. What's driving Riyadh towards this high-stakes gamble, and who stands to win or lose everything? Saudi Arabia's role in the oil market is unparalleled. As the world's largest oil exporter and founding member of OPEC, the kingdom has long been referred to as the central bank of oil. It holds the power to pump massive amounts of crude into the global market, influencing prices and shaping economies far beyond its borders. But oil price wars aren't just about economics. They're a strategic chess game. Saudi Arabia has used oil price manipulation in the past to secure its position and assert dominance over competitors. Take 1986 for instance, when Riyadh slashed prices to recapture market share, or the 2014 war to challenge US shale production. In 2020, during a dispute with Russia, Saudi Arabia flooded the market, leading to historic price crashes, including a brief dip into negative territory. So why would Saudi Arabia consider starting a price war now? Several factors make this a fascinating possibility. First, there's market share. Over the years, Riyadh has watched its dominance erode as new players have emerged. US shale oil has transformed global energy markets with its flexible production and growing output. Meanwhile, other oil exporting nations, including some within OPEC, have failed to stick to agreed production cuts, undermining Saudi Arabia's efforts to stabilize prices. Could a price war be Riyadh's way of sending a message that it's still the dominant force in oil? A critical factor to consider is how the Saudis' oil strategy intersects with its broader regional ambitions. The kingdom's rivalry with Iran extends beyond oil, encompassing conflicts over influence in Iraq, Syria, and Yemen. By slashing oil prices, Saudi Arabia could drain Tehran's financial resources, curbing its ability to support regional proxies like Hezbollah or the Houthis. At the same time, Riyadh could use this economic pressure to reassert its leadership role in the Gulf, solidifying alliances with neighboring states that share concerns over Iran's growing influence. Would this strategy deliver the political results Saudi Arabia seeks? Second, geopolitical pressures could push Saudi Arabia towards the strategy. Rivalries in the Middle East, particularly with Iran, have often influenced Saudi Arabian policy. Iran, a major oil producer, relies heavily on its oil revenues, much like Russia. By slashing prices, the Saudis could potentially weaken both of these adversaries economically, reducing their ability to project power on the global stage. Could such a move tip the geopolitical scales in Saudi Arabia's favor? Let's not forget Saudi Arabia's ambitious Vision 2030 project, aimed at diversifying its economy away from oil dependency. This transformative plan requires massive investment. Ironically, a price war, while damaging in the short term, might pressure Saudi Arabia to accelerate its diversification goals. However, economic diversification is easier said than done. Vision 2030, while ambitious, faces significant hurdles, including bureaucratic inefficiencies and resistance to change within traditional sectors. A price war could cut into oil revenues needed to fund critical infrastructure, tourism, and tech projects that underpin the initiative. It's a delicate balancing act, aggressively targeting competitors while ensuring sufficient income to fuel diversification. Could Saudi Arabia's leaders gamble on short-term pain for long-term gain? Or would the strain on government finances risk stalling progress? The stakes are monumental, not just for the kingdom, but for its global partners investing in these sectors. It could be a gamble, but with Riyadh's financial reserves, perhaps it's a risk they're willing to take. If Saudi Arabia were to initiate a price war, how would it play out? Picture this: the kingdom would ramp up production by millions of barrels a day, flooding the market and causing prices to plummet. With production costs as low as $20 per barrel, Saudi Arabia has a clear advantage over high-cost producers like US shale companies, Russia, and Venezuela. Such a move could bankrupt weaker players, consolidating Saudi Arabia's dominance once again. But would the global oil market cooperate? Unlike in previous price wars, today's market dynamics include an unpredictable wildcard: renewable energy. As solar and wind technologies become cheaper, they present a growing threat to traditional fossil fuel dominance. A prolonged price war could create a tipping point, prompting countries to accelerate investments in green energy to reduce reliance on volatile oil markets. Saudi Arabia's dominance may be unmatched today, but could a poorly timed price war hasten its decline by making alternative energy sources more appealing to a wider range of nations? It's a gamble with high stakes. While the kingdom holds significant financial reserves, even Saudi Arabia isn't immune to the economic consequences of low oil prices. Its ambitious Vision 2030 plans require stable oil revenues to fund developmental projects. A prolonged price war could strain its budget, forcing difficult trade-offs. So, is Saudi Arabia prepared for the potential blowback of its own strategy? One thing is certain: the stakes are incredibly high. If the Saudis were to flood the market with cheap oil, the ripple effects would be felt far and wide. From struggling oil producers to geopolitical adversaries, from everyday consumers to global climate goals, the consequences of a Saudi-led price war would reshape the world in profound and unpredictable ways. The timing of such a move could also be influenced by global economic conditions. If major economies are already struggling with inflation or slowing growth, a Saudi-led price war could exacerbate economic instability. Conversely, if energy markets are experiencing a period of high demand, such a strategy might seem less disruptive in the short term. The unpredictability of global events such as conflicts, pandemics, or technological breakthroughs adds another layer of complexity. Timing, as always, could make or break the strategy. So, could Saudi Arabia really start another oil price war? It's not just a question of economics, it's a matter of strategy, power, and survival in an ever-changing world. The possibility of a Saudi-led oil price war is both fascinating and deeply consequential. What do you think? Could Riyadh take this bold step? And if so, who would win and who would lose? Share your thoughts in the comments below. Like this video. Don't forget to subscribe for more deep dives into global events. See you next time.